Good evening, everyone. Time for another silver update. This is the gold chart, the daily gold chart provided by netdenia.com. You can click on the link below. It's denominated in Japanese yen, and you can see here we're rising now out of this flag type formation. We've been watching the currencies very closely. Gold has been weak recently in the various currencies. Of course, the weakness in the yen seems to be indicating that the yen is going to be the first of the ugly stepsisters to lose to gold. So that's going to be the projection on that. Now, if we get over to the silver chart, we had quite the smackdown. I apologize for not doing updates. Was a bit under the weather there. There was a very interesting takedown of silver that actually occurred in the after hours. If you look at, let's clear off the indicator and put in the volume. The Bernanke speech, which very strangely happened at 12:12:12, resulted in a rally and then a big sell-off. The sell-off in the after hours was not anywhere near the volume that occurred with the rally. You can see a huge number of buyers came in at the Bernanke announcement of QE4, and then it drifted lower, kind of a correction back down. We'll pull it back to get a little bit more info if we go to 10 minutes. It was kind of drifting back in a correction type of phase, but then in the after hours it just had a violent sell-off. You can see from 33.33 down to 32.80. This was all just in this after hours volume. So kind of strange. Then of course the selling continued, and it didn't find a bottom until all the way down around 32.20. And then today we got a touchdown around 32. So is there a bottom put in? I can't say for sure. You have to remember that if you subscribe to the idea that the price of silver is being manipulated for whatever reason, then it's in their interest to keep the price of silver down, which would indicate inflation, money printing, and an abandonment of confidence in the dollar. But then again, if the price of silver goes too low, there's the potential that there could be a physical shortage, and they certainly don't want a physical shortage to occur, because that would be a key indicator of how bad the fundamental situation is. So I'm expecting a nice balance between roughly 30 and 35 until we get some resolution. If we pull out to the long term, there just is still this tightening going on in this gigantic formation. We're just tightening and tightening until we get a resolution to the up or the downside. So we'll just keep watching it. It looks like 32 is a fairly strong floor. Now let's get over to the 4-ounce silver for the people sweepstakes. That took a long time. I think a lot of people weren't aware of it. It's finally ended. I did post the password. You can go to the beginning of this thread, and there's a link to a video and to the video is of a website of a randomizer, and then the results of the randomizer. So you can see the date on the file, so that the winners were chosen beforehand, and then the file was sealed with this password, so you can check for yourself. These are the winning posts: 155, 165, 254, and 400. And the winners are Swansa Tech, Cointro, Fredrum's 2002, and Chubby Diaz. So congratulations to them. I'm going to be reaching out to get your address to mail that off to you in the next day or so. And let's jump over to the questions off of the forum. I'm going to take a couple of these. Of course, the shooting has been in the news for the last few days, and I'm not going to go into that. That's a big tinfoil hat thing. We're going to mention it briefly when we talk about another topic. First question from Silver Taku is Fort Knox. And hi, Brother John. Seasonal greetings to you. And many thanks for your great reporting. The Bank of England today had the Queen and Duke of Edinburgh tour the gold vault. All the gold was on display. This follows a professor who was also allowed to film the Bank of England's gold recently. This must put pressure on the U.S. to show where their gold is. Do you think a film crew will be allowed in Fort Knox? Thanks, Silver Taku. Well, I don't think if there is any gold, it's in Fort Knox. It's probably somewhere in New York, but who knows? Were those real gold bars? I have no idea. No way of knowing. The only thing that stands out is that they would find it necessary to give that tour. That would indicate a very significant loss in confidence. You have to look at the big picture. Gold, as Ed Secoda has, I've pointed out, Ed Secoda pointed out very often, that gold tends to be piled all into one place and buried, and then roughly another 50 to 100 years or so, it's all dug up and moved to another place and buried. So where the gold resides at, if you think about it, it's fairly logical. The United States and Britain pretty much won World War II hands down. Not only were they the victors of that war, but America specifically, not as much Britain, but they were not really even impacted economically. So it's understandable that if you have some kind of dollar-based gold-backed system like we had with Bretton Woods, that less stable governments, let's say, or governments that are not as confident in their ability to defend themselves from invasion, that they would actually keep their gold offshore. Governments have the same interest that you do, not to lose their gold. So it's not surprising that they would try to keep their gold from being taken by an enemy invader. Then again, as that power begins to break down, that is the Anglo-American Empire, then the doubts begin about the safety of the gold. The safety is not about an invasion, but the safety has to do with the honesty and the integrity of the governments who are stockpiling that gold. So I expect to see a lot more of the countries who have gold stored in other locations begin to request audits, assays, tours, etc. I think this trend is going to accelerate, but it's very, very telling that they would find it necessary to have the Queen tour those vaults. And the next question, this is on Bernard von Nothaus, or as I call him, Bernard von Nuthouse. He's the guy who had the Liberty Norfed dollar. It was an attempt, at least from what I've read, it was an attempt. He was pretty strident to promote this as more valuable than the dollar. Let's put it at that. Now, of course, he was accused of being a terrorist, which is patently absurd. But I think using the term dollar was a big, big mistake. And I think that's the main reason that he became a target. I've seen that eBay has banned the sale of Norfed Liberty dollars, a further attack on freedom. I thought money was something that two parties agree to trade with, and an agreement is between those two people. The Norfed dollars do not claim to be anything other than 1 ounce coins with the Norfed wording. I would love to hear your thoughts on the whole fiasco. Another step towards a tyrannical state. Would appreciate your thoughts. I listen to every video you make. Very grateful, etc. Well, there are other dollars. You have Linden dollars, and it is strange the way they treated him. I think it was way over the top. But then again, I also think that he made himself a target. It seems like he was almost like he was trying to provoke the response. I think the response was a lot more extreme. My suggestion, if you're going to put out a round, don't put the word dollar on it, and you'll probably be okay. And let's take one more question. Diversify your PM portfolio from Chubby Diaz. Hello, Brother John F. I must admit, once a part of the herd of sheeple out there, but thanks to you and a few others, I've really opened my eyes to what's happening all around us. Thank you for that. All I keep hearing is you need to diversify your portfolio with precious metals. I currently have about 30 to 40% in PMs, but nobody ever specifically tells you how to diversify your PM portfolio. I personally like to have a wide variety, including junk silver, pure bullion, bars and rounds, government-issued coins, eagles, maples, semi-numies, perths, pandas, and numismatic-graded coins. I know you don't give financial advice, but if you would give your personal insight, it would be greatly appreciated. I have two questions. One, should a truly diversified PM portfolio include more than just gold and silver? For example, should platinum and palladium make up a small portion of my PM, say 5 to 10% each? Also, should mining stocks make up a small percentage of my PM portfolio? Because if it wasn't for mining companies, we would not have the physical metals. Well, that's a very good question. I think this is a good diversification for silver. There's a lot of different kinds of silver there that he's got. That's a very good job. Gold and silver diversification, of course, I tend to lean more towards silver than gold just because I think that silver is much more undervalued than gold. I think that both are going to go up, but I think that silver is going to go up a lot more. So I believe in more heavily weighting towards silver. Now, as to platinum and palladium, I've bought palladium in the past and never bought platinum. There are your platinum, U.S. platinum coins, 1 ounce coins. They're not eagles, but it's an interesting play. I guess if you're expecting perhaps some kind of gold and silver seizure, then you might want to hedge yourself with some physical platinum and palladium. I don't consider platinum and palladium to be money. The palladium group of metals has never historically been money. The money metals have been gold, silver, nickel, and copper or brass. That's been that way for thousands and thousands of years. I think platinum and palladium are just so rare, and also that they're very soft. They just don't really meet those requirements. But yes, they might be an interesting hedge if you're interested in doing that. Now, in regards to mining stocks, I would say mining stocks are for play money, perhaps speculative money. I consider mining stocks to be stocks. So to the extent that you want to play with your money in stocks, you might want to play with your money in mining stocks. If you find a really good mining stock out there that is very, very undervalued, you might have a deal. But again, as I pointed out, mining stocks have many, many strikes against them. The primary one being that gold and silver prices are suppressed. Therefore, the cost of mining always goes up faster than the profit, and that's a big, big drain against them. The other issue is the failures to deliver in the DTCC. We just don't know how many stock shares are counterfeit and how many are real and how much naked shorting is going on. So I've never recommended mining stocks, but I guess if you're a gambler and you like to play with the paper, you can do that. So let's get to the main story of the night, and that's going to be this UBS indictment. These are criminal charges to be filed in Libor Gate. Now, that's the scandal, if you remember, that broke a while ago about the rate rigging in Libor. I'm going to read a little bit of this and then comment. And this is from Zero Hedge. As the fallout of Liborgate escalates, the next big bank to be impacted in the fallout started by Barclays' civil settlement revelation is set to be troubled UBS, already some 10,000 bankers lighter, where as many as 36 bankers are reported by the implicated in the fixing of the rate that until 2009 was the most important for hundreds of trillions in variable rate fixed income products. Only instead of attacking the U.S. or even European jurisdiction where the next big settlement is set to hit is Japan, a country whose regulators as recently as half a year ago promised there were no major issues with Libor or Tibor, as it is locally known, rate fixings. And while this most recent development will have little material impact on UBS' ongoing business model. The one difference from previous settlements is that it will likely include criminal charges lobbed against some of the 36 bankers. And then there's a quote from the FT, and continuing, to a big extent, the reason why so many banks have given up on Libor and are now eager to settle comparable allegations is because in a world in which not banks are primary counterparties to other banks, but central banks on board all the counterparty risk, especially in Europe, Libor is now an anachronism, an unsecured lending rate remnant from another time, a time when there was risk a bank may fail without dragging its host central bank. That time is now gone, and as a result, the only relevant metric now is how effectively can banks flush to the gills with excess reserves, courtesy of various central banks, use said capital to generate a return on central bank capital and a high enough ROE to keep shareholders happy. And I think that's the important point. Why are we seeing these indictments so late? What were the time frames that this was alleged to occur? Well, let's look at the Libor rate history. You can see from this chart, this is fedprimerate.com, you can see that at the beginning of the financial crisis, Libor rates basically hit bottom. Now, I'm assuming that it was alleged that it was in this time frame here that they were alleged to be rigged, but I would say by looking at the chart that the time frame that we're looking at right now, if they were rigged then what are they now? Pegged, rigged, and pegged. So this whole Libor scandal really has never made a lot of sense to me. They're getting upset at the banks for saying during the financial crisis, implying and agreeing together to imply that they were more solvent than they really were, that the risk wasn't as great as it was. But if that's the case, then can we say that these banks are now 4 times less risky than they were during the rigging? And if that's the case, how is that so? None of it really makes a lot of sense. And of course, it's probably going to be a bunch of token people thrown under the bus. If you go down to the comments, you've got very strange tinfoil hat things going on where it's implied that this is from the examiner.com. I have no idea about the validity of this, but the headline is Libor scandal grows as the fathers of 2 mass murderers were to testify. So the rumor is that the father of James Holmes, the Aurora, Colorado shooter, and the father of this latest shooter, this Lanza kid, both of which were supposedly going to testify in this Libor scandal. I haven't found any mainstream media confirmation of that, but it does seem very strange. And then the other one that you had in the news, if you remember, the gentleman who was, I believe he was a VP, CNBC, who was going to break some gigantic scandal, and then his children were murdered by the babysitter. So all that stuff, very, very strange, and I'm not sure what's behind it. You'll have to investigate for yourself. But it looks like they're going to throw some janitors under the bus, as Tyler Durden says. Maybe do some token wrist slapping, and then maybe levy some couple $1 billion fines, where of course the money comes from the central banks anyway. So seems to me a big charade. I don't really expect anything to come of it. The main scandal, of course, is going to be the rigging of the precious metal prices. That's a rigging that really matters, because the difference between precious metal prices and interest rates is that precious metals can't be printed at will, whereas central bank cash can be printed up at the stroke of a keystroke. So the real scandal is going to be the precious metal suppression. We're watching the gold Japanese yen price closely, because it's my expectation that that's going to be the first currency that will see new gold highs. and then I expect the rest to follow. And we'll talk to you next time.